Welcome here to our next webinar here at JFD Brokers. My name is Stefan Friedrichowski, as always, for those kind of webinars. A warm welcome in the name of JFD as well. Today, the 20th of December. Yeah, all right. In 4 days, we have already Christmas. So the year, goes finally to its end. But nevertheless, we have still one webinar, and that webinar has the topic news trading. That's a quite interesting general topic because, as you know, news are quite often at our stock markets. Especially some those events which have been, for example, yesterday, like the Fed interest rate decision of yesterday, and exactly those kind of news will be the topic of today's webinar, because we will focus ourselves especially on central bank decisions. And you may think, hey, that's not quite often, isn't it? In principle, you're right. I mean, okay, we have Fed decisions about every 2 months, same for EZB, but you know that we have Forex pairs or currencies much more than just euro or US dollar. What about Japanese yen? What about New Zealand dollar? And those regions have interest rates decisions as well. Maybe up to now you have been too much focused on euro US dollar, or maybe you look to the DAX or S&P 500 when it comes to Fed and EZB, but let's have a look to all. And then finally it will be you will have much more possibilities to have trading events like central bank decisions. Okay, so that's in general about the topic of today. And as always, you see already my contact here, s.friedrichowski@jfdbrokers.com. If you have any questions, any need for, or if you would like to have those Excel sheets, which I will show later, no problem. Just send me an email as always, and I make sure that you will get all those Excel sheets or other things I will show around here. The slides of today you can already download as we speak. The same as always for my webinars. Before we really go into the topic, oops, not that one. You know that I have to show at least once that a risk disclaimer, because we talk about trading, we talk especially about trading setups, trading strategies, and you may use those strategies, those setups by your own. But as always, it's your own responsibility, whatever you do, whatever trades you initiate. I think that's self-explaining, but at least we have to show that once that's simply a legal regulation. Okay. What are the topics of today in more detail? So first, I want to briefly touch news trading in general, because I want to give the topic of today really an envelope of what's generally possible and what's my idea behind of what we are doing here, and therefore just one slide for news trading in general. Then we go, exactly as I mentioned already, we go for central bank decisions like yesterday. The Fed decision, they decided to increase the interest rate, and there have been some movements around the market, and not only related to euro US dollar. I think more or less every underlying was affected in this case, but let's see how we deal with that. You know that whenever I talk about a trading strategy, it's not just like, hey, use a stop loss of 1%, and if the EMA 20 crosses EMA 125, then you should place your order or whatever. it's not just a receipt like just the description of the setup. You know that whenever I talk about trading strategies, I want to check them. I want to backtest. I want to simulate exactly what would have happened if I have a certain setup and I would have applied that setup, let's say, for the last 12 years. As always, sometimes we create Excel sheets for that. Sometimes we have my C-coded results. Same will be today because we will use two small time frames and that we cannot, we cannot manage in Excel. But if we do something like central bank decisions, we need historical data for the decision dates in the past. And when I started the topic, that was really the first thing. I have no clue. Thanks to Peter, he found an internet site where I can download exactly those kind of information. But we need those because maybe I can look in my calendar and see still, okay, in June there has been an EZB decision. But what about 2008? What about 2012? So we need historical information about news in general. And Peter found one and shared that with me. So therefore, I will share that with you. There's an opportunity to have all the kind of news for download in terms of date, what kind of news, and what kind of region is originally the news. We will see that. Then we will optimize our strategy for central bank decisions, and we will optimize with respect to 3 degrees of freedom because we need later something I call, once again, the reference time. We use the same wording already in the last webinar, but and indeed, today's strategy is a little bit similar to what we did a month ago. And then we need something like what I call here distance and the risk reward ratio. So we have 3 degrees of freedom and we need to optimize those for our different underlyings and different kind of news. Finally, we create, as always, a portfolio for 29 underlyings. And you will see the results are quite good, I have to mention. So news in general. So let's give a definition here. So what is called news when it comes to stock markets? News are those events which are known in advance with a date and a time. And at that point in time, some numbers are published, a decision is announced or whatever. So you see, the strict definition is something you know in advance. On the other hand, we have those other kind of news, like 15th January 2015, the Swiss central bank released the Swiss franc all of a sudden. Or especially since 2 years now, we have tweets from Donald Trump all of a sudden. And even those tweets might have a big impact on stock-related stuff. But those come all of a sudden. And there are even worse cases, like think about 9/11. So the World Trade Center has been hit by airplanes. Those news I cannot cover here within the webinar, and I cannot cover those news with any trading strategy, but because they come all of a sudden, so no chance. What we do here is we look for news which we know in advance with date and time. That I've just restrict myself today for central bank decisions is only limited resources here. But anyhow, other typical interesting dates would be non-farmers payroll data once a month on Friday at a given time, or even other kind of news like IFO information from in Germany and in other countries. You have similar numbers for unemployment rates, whatever. The good thing is that those news in most cases lead to bigger price moves. So I don't think that in general bigger price moves are good or not good, but at least they appear, they are there. And our question is, how can we slice out a little bit from those moves into a profitable trade? Since the moves are big, we don't have to deal with, let's say, small moves like a few bips. No, we have bigger ones. So that is a little bit easier, you will see. And I want to mention what I do not mean by news trading, what we are doing here today. Because sometimes, for example, yesterday, you might have some expectations. You have your own mindset that you think, okay, I strongly believe, for whatever reason, that the Fed will increase interest rate. Okay. Uh, how you come to that conclusion, it's your turn. But even if you have a good story for that, then there's the next question. Okay, normally for specific kind of news, there's a specific answer of the market. But the downside is the market is not that strictly following any kind of rules. So even if you think, okay, if they increase the interest rate, then the effect on euro US dollar must be going down, going up, whatever. The remaining question is, how does the market really react? And even if I have that kind of mindset, that kind of expectation for specific news, finally, I have no idea, no clue how the market will react on whatever I expect. So there are too many question marks. Therefore, that will not be the topic of today. To come to some wise conclusions of, what will really happen at those news in terms of, I know the unemployment rates in advance, or I know they will not increase the interest rates, or they will double the increase, or whatever. No, that's not the topic of today. One general remark as well here when it comes to news trading. Um, yeah, news go more or less hand in hand with spread widening and potential slippage for any trade. That's what you will observe. You have observed already in the past, and it's always there. That especially at the point when the news pop up, then we have that spread widening. So opening trades within the first seconds, or maybe even the first minute of a news, then you might suffer from spread widening, or you might suffer from slippage as well. Can I incorporate that into later calculations? Of course, no. At least not slippage. Spread widening, in principle, yes. Then I did indeed some, let's call it, stress test with those calculations by just multiplying all the spreads by a factor of 3, for example. But finally, slippage I cannot simulate. I have no clue how to do that. Therefore, the only thing I can do is I apply some bigger spreads for that. But finally, still, that might have an impact on our strategy, which we will develop during the webinar. Now let's focus really on interest rate decisions. So what we know in terms of frequency, that, for example, the Fed or the EZB, typically they have decisions every 2 months. Okay, both in average make already once a month. And later, we will discuss 8 different regions. So that means finally, on average, we have 1 decision per week. Okay, that's good. Then we don't have that less trades. And the other good thing is, whenever it comes for decisions on euro, like EZB, we might look to 7 forex pairs and their reactions. So we get a lot of trades still, not as many as for other strategies, but still, finally, my portfolio equity is built by 5,000 trades for the last 12 years. So still we have some good statistics on that. Just the two examples for EZB or FED. Typically, the EZB decisions is on Thursday, a quarter to 2 p.m. And there we have the interest rate decision. And especially here, we have 45 minutes later at 2:30 a speech from the first guy. I have no idea how they are really called, but anyhow, you know who I mean. That's Mr. Draghi currently. And same for the Fed. Those decisions are typically at 8 p.m. German time. I'm always referring, all times here are always German, even later when it comes to the Excel sheets, all times are German. Then we have those decisions on at 8 o'clock, and for example, yesterday. The good thing is we can always have a special focus. And for example, if we have an EZB decision, then we can look to everything which is related to euro. What I mean here, therefore, I wrote down here euro XXX, and the XXX stands for example, Australian dollar, Canadian dollar, Swiss franc, and so on. So we have in total 7 pairs we can consider. And we have Fed decisions, then everything is mainly related to US dollar, but once again, we have 7 pairs, at least if we follow that list later here. And the only difference is that we have sometimes US dollar in the first name. You know that I always call forex pairs in a way that I call the first name last name. So the first 3 letters and the second 3 letters, first name, last name. And the only currency which is always first name is the euro. I'm still wondering that Trump has nothing against that. That sometimes he is not, the US dollar is not in the first place. But let's see. I should not talk to him about that topic. In general, we look to 8 regions. I call it regions because the euro is not a specific country, but all the other ones are specific countries like Australian, Canada, Switzerland, and so on. So we have lots of things. Let's first have a look to a typical situation of such a interest rate decision. And two Excel sheets for that as a starting point in order to illustrate how we can develop, how we can set up that kind of trading strategy. Within that Excel sheet, I have one graph. That graph is the euro US dollar versus time, but not as a price. I have normalized everything to the price, to the close at 1 second before a quarter to 2. So the typical time frame of, or the typical time for that decision announcement. So that therefore we have here exactly where you find my cursor right now, we have definitely a 0. We see some price move looking back from that point in time, and you see the price move exactly after the decision has taken place. As that the prices here, or that graph is arranged from data from the 25th of October. So there has been an EZB decision. What you can see here is quite typical. The first thing is, after the decision, in this case, the price went up, and later exactly to the other side down. Good. Let's have a look to really the time. So there has not been any fast move directly at a quarter to two. And I have not changed summer winter time or doing any mistake here. No, definitely no. And even when the speech of Draghi has started, that is when my cursor is now, not exactly at that point in time. Maybe a little bit later here, but and maybe all those spikes up and down have been related to whatever Draghi has said at that point in time. But finally, you see some bigger move to the south. Looking to just that statistic, one example here, one might think already about a trading strategy. The trading strategy, which looks for the reference time, which might be, and you will later see, I will not use exactly that point in time, but let's say for a second here, quarter to two. And let's think about a breakout strategy. Think about we would place two orders, buy stop here, maybe at 0.0%, which would fit exactly to what we have within that graph. As always, when you have a statistic one example, you can turn around your numbers in a way that they fit best. That order, the buy stop order, would not have been triggered because we do not hit the 0.2 level here. On the other side, later at about 3:30, we would have triggered the sell stop order, which is good because still for the rest of the day, price went south. Good. So let's think about a breakout strategy as an input or the basic idea of how to trade EZB or any interest rate decision. Let's have a look to all the EZB decisions of the last 12 years. I have summarized those in one single graph. Unfortunately, that Excel sheet is 18 megabyte big, so need some time sometimes here to get that picture. I know it looks a little bit crazy, and indeed it looks crazy, but it is showing us a lot of information here. So how can you interpret exactly that picture? You see that we have something, let's call it a singularity at that point here. And of course, that is the second before the quarter to two. All the prices have been normalized to exactly that price of that day. So in total, we have here about 100 EZB decisions for the last 12 years. Or even, it's around that number. And what we can learn already here is that looking from the decision point backwards, we see not that big moves. Okay, so the price in total was more or less calm before the decision. After the decision, we have really some big explosions, at least sometimes. The prominent example here is heading almost 4%, which is really a lot for Forex markets. So, but what we see here as well, even if I don't connect those circles with a line because we still would not see much more than with that cloud of points here. It's not always happening everything in the first few seconds. No, definitely answer no. We have much more time than we think. That's good because that spread widening is prominent more or less only in the first seconds or even first minutes. Later, market is quite doing well. So then we don't have problems with that. But we see we have bigger moves exactly after the decision, but not only in the first minutes. Sometimes it really takes minutes, even hours, until those moves come, to an end. So that's a good idea. Thinking back about what I told you already about how the strategy might look like. So breakout strategy might be a good idea. And so let's follow up on that. But first, let me close that Excel sheet because then I hope I don't get too much problems later with my computer here. Sorry. So let's come a little bit more close to the setup we want to introduce here and want to investigate later. So let's be more general, not too specific. Therefore, let's start with a certain reference time. And I'm telling the story, that's more abstract because later I want to apply the same story not for EZB, for New Zealand, for Japan. So therefore, I just call it reference time because I have no clue out of my head when those decisions take place. Therefore, we look for a specific reference time for a specific region. So, for example, EZB, we might think about a quarter to 2, but later it will turn out that we use a different time. But anyhow, so because at the reference time, we place our orders. Our two orders, we place a buy stop order and a sell stop order. And what do I mean with they are placed at reference time? So we look at that point in time to the price. And then we apply a certain distance to that price. And the price plus the distance, we place the buy stop order. The price minus that distance, we place our sell stop order. And the distance here is measured in percent. Because still, even at Forex, we might have euro US dollar at parity, so about 1. A couple of years ago, it has been at 1.6. So therefore, it's always better not to measure any distance absolute. Therefore, it's better to do it in percent. So the reference time and the price at the reference time plus distance and minus distance is exactly placing our buy stop and sell stop order. The two orders we define as OCO, so one cancels the other. What does it mean in general? It means that we have an order range, so the two orders, they create a range exactly 2 times, so twice the distance. So that is the upper and the lower end. And therefore, I mentioned already, the strategy is quite similar to breakout strategies. When we think about classical breakout strategies, normally we have two reference time, so starting time and an end time, and between those two point in time, we measure the price range. In this case, we do it exactly the other way around. We just have a reference time and then a certain distance, and then we are finished with our range. Then we need a definition for our stop loss. And in order to not have another degree of freedom, I simply place my stop loss exactly always on the opposite side. So that's quite easy. We need to take profit for the trade, or at least I want to have one here. And therefore, we take a fixed risk-reward ratio, and then we can calculate the take profit level on both sides. And finally, we need a rule. How long should that trade survive? And if the trade is triggered and we do not hit stop loss neither stop loss nor take profit, then just as a definition, I go for 5 to 11 and I close all the trades whenever there are trades still open, so before swaps. So that's the reason for that point in time. Finally, what does it mean? We have 3 degrees of freedom. That's not that many, that's good, but still we have 3: reference time, distance, and risk-reward ratio. That's all we need for that strategy. And to make it a little bit more characteristic, let's at least go once for a chart here. And I just want to go for a US dollar chart, and maybe still we can have a look to what happened yesterday. Let me see whether that will still fit here. But first, let me remove all the lines here. And only will take a few seconds, then all the lines are deleted, hopefully. Give me 1 second more. So, löschen alle. For whatever reason, it doesn't work. Yesterday in the German webinar, I have been able to do it, but today, no, I have it. Good. Sorry for the delay. So let's have a view on yesterday's decisions. Maybe I can still zoom out a little bit. So no, that's too much. So let me see. It was about because it's JFD time, so it is. I can I have it quite easy. You see the volume here. That was at the point in time. Yeah, we have the decision. Let's first have. Oh no, the reaction was a little bit later. So let's go here. Here we are. That's the last candle before the interest rate decision. And so I need to zoom. There we are. So here we can place or think about how to place our orders. Why is that always coming back? I switched that off. So now we are. So here we could place our orders, and let's first have a line here, so it's a reference time, and then we would place our 2 orders, and let's think about maybe something like 0.2%. That would be around here. So I will not calculate it precisely. So it would be that's okay, let's go for 1.5%. Then this order would be around here. That would be the buy stop order. And we would have another one on the downside here. Those 2 orders would be in the market. So it's not mathematically correct, but just to illustrate what happened. And the yesterday decision would have been quite easy. You see, price went down, and that's all. We would have been triggered with a sell stop order. That's fine. And later, in our case, so it's about here, we would have, okay, there we are. I will go for horizontal as well. That is the 5 minutes to 11. We would have closed the order. So everything would have went fine. Okay, statistics 1. That's no proof of the concept, but that illustrates a little bit more in a chart how the strategy would run. So yesterday I would expect, or would have expected here some slippage, because it was already in the first minutes. Maybe I can have a closer look. Let me see whether that works. Whether it was really in the first minute. No, it was not in the first minute. So no, here you can see that for 5 minutes, everything is still calm, and then we have that move. Okay, anyhow, you see how the strategy in general should work. Buy stop, sell stop, one cancels the other. So when the order has been triggered here, we would have deleted our buy stop order. And in this case here, we would not have hit any take profit because that would be more far away, at least for most of my parameters. But we will see the parameters in a second. And then we would have closed that trade 5 minutes to 11. According to the rules, you may use a little bit different rules, no question, but at least those are my rules. So that's at least yesterday, everything went perfect. But now let's go back to what we can calculate. So now I want to simulate the results for historical data. And as I mentioned, first thing is what we need. Okay, we need data, but not only the price data, and you know how to get those. We have touched that topic several times during our webinars, how to get data. I will use M5 data here in order to be at least not precise enough. Let's call it that way. So the price data is no big deal to get those. But now we need the other link here. And the other link I have opened already here. Okay, the website is in German. I have no idea whether you can change to English, but I think most of the relevant information you will get even if you are not able to read German. But anyhow, so normally you see all the decisions for a single day. That's today, and yeah, it's quite a lot of different kind of news. But we can apply a filter, and that filter is, for example, meant one thing. You can select specific regions, like you are only interested in New Zealand and maybe in USA. So let me go only for USA. For an example, and then so you can select the regions, and then you can select a period of history. So if you want to go further down the history, so like 2007, for example, and then maybe until here, then you can apply that filter, and then now it works. And now you get a list with all the dates according to your filter. What I unfortunately forgot, I go back to my filter, because I only want to have interest rates decisions, that is Zinsen, that is interest rate. And that means if I press that button, I only get all the Fed decisions. So now I have a list here with all the Fed decision dates and times, and even some numbers about what has been the decision and what has been the expected value before. Even those data you can have here. Now the question is, how can I get those data into Excel or any CSV file? Answer, I know here there's no real download button, but you can simply mark that and then copy it to Excel. And as always, it works better not with the original Excel. It works, that copy paste works better with LibreOffice. And then you have those numbers in LibreOffice, and then you can transform those, and then you have finally all the interest rate decision dates and time in one single table. So finally, if you do that, and I have done it already, finally it looks like, no, not this one, so this is the equity. And then you have a list. In my case, this list, I have transformed the list into that way here. Let me enlarge it, zoom out here a little bit. Quite a simple list with a date the time, and the relevant region. So to say the country, because later I will use exactly that symbol for comparison to my forex pair under interest, and then I use exactly those things here. That list is, you can have that as well. Then you have a list of all decision dates for 8 different regions, and those go back to 2006. So it's quite a huge number. So we have, since 2006, we have 800 interest rate decision dates. So it's not that few. So we get a lot of trades now. That's the one step. We get the data for interest rate decisions. And the next step is we need to simulate our idea. And that we do on an M5 time frame. And we have always to investigate 2 cases for a single pair. For example, if we are interested in the euro US dollar, then we should do it twice. One time we go for all the decision dates of EZB, and second time we go for all Fed decisions, because the name euro US dollar is already telling us, hey, both regions are of interest, definitely, and therefore we investigate euro US dollar once for all the dates of EZB and once for all the dates of Fed. And that we do independently, because of course the reference time should not be the same as the decision time is already telling us. One is at around 2 p.m. and the other is around 8 p.m. So we need 2 reference times, definitely. And maybe we need even 2 different sets for distances or for risk reward ratios. The next process I cannot show in Excel because we have too much data. So therefore, just let's have a quick view how I do it with my C programs. They are already done, and let me simply go in my history. So now I start one program. I give it some parameters. In my case, I'm telling that program, okay, please go for euro US dollar. Please compare with Fed dates, and use a distance of 0.3. Use a risk reward ratio of 3, and go for the reference time of 8 o'clock. That are those numbers here. I know they are quite small. Maybe you can't see them. So I start that program. It takes a couple of seconds, and then I'm done. And for the last 12 years, price data have been loaded, decision dates have been loaded, and the strategy has been applied to those data. So it goes quite fast. And then I get an equity for euro, US dollar, with that reference time, that reference, that distance, and that risk reward ratio. And then you can finally get something like an equity here. I have to mention that all my trades are with a risk of 50 euro. So the lot size or the position size for the trade is always calculated with those 50 euros. Okay, that's the equity with that set of parameters. Can we improve it? Answer, yes. Let's go for another example. Let's have a slightly different reference time. Let's go a little bit more before that 8 o'clock. And let's do the calculation once again. And then you can see a change. And here we are. Oh, I have first to close the old one and then open the results once again, and then here we go. So with a slightly other set of parameters, we get already a little bit better results. Of course, it's not the perfect equity for one single underlying, for one single decision, but we can do more. Let's have a view on what happens at EZB, and let's have a look for what we get out of EZB decisions, and then we get, for example, that equity. The funny thing is, I use the same distance, but my risk-reward ratio is now different. My risk-reward ratio is not 3, now it's just 1. And still my risk per trade is 50 euros. And then I get an equity which looks like this one. That looks already better. But as you know, the best you can do if you have something, or if you have a strategy like this, build a portfolio. What we need is, we definitely need much more underlyings, and we, as you know, we can always use any underlying twice. One for the first name of the data, for the forex pair like euro, so we look for EZB, and one for the second name or the last name, so for US dollar, meaning for the Fed decisions. So we have in total much more possibilities to trade that, and then we can combine all the results to a single equity. Let me first summarize what I have done. So I have looked for the 8 different regions and those different interest rate decisions. So with that single list where I have all the ones decisions in one list. So I have in total 28 forex pairs. Translate, because I can use every forex pair twice. I go for 56, and then I added gold as well, but that only one time, because there are no specific decisions for the symbol XAU. So anyhow, that's a little bit funny. And then we optimize for reference time, for the order placement, for the distance, and for the risk-reward ratio. And then we have a final result. That final result, if you combine all the equities of those 57 different sub-equities, we get exactly this one. This consists out of 5,000 trades, and I will show you the list of trades in a second. And that equity is really looking great. Within my slides here, I go already here one step further. I know you may not read, or you may not be able to read that table. I have the same table in my Excel sheet, and then I can zoom better into that table, and you can better read if you have interest in that Excel sheet. I will send it, of course, to you. So let's go back to our equity, and that we have how many trades? That's a little bit more than 5,000 trades for the different underlyings, different decisions. So looks quite impressive. 50 euro has been the risk per trade. Looking for the overall growth and the account size which would be needed for such a strategy, which is just a little bit above 5,000 euro. And there, the monthly growth, the monthly would be 7%. So that's a really impressive number. But question, do I expect the same going on, or could we transform those results in real life trades? I think not to that extent. But if it finally in live trades goes only for half of those profits, we have still quite an impressive strategy with 3.5 earnings per month. Okay, So there's still enough. So we can suffer from slippage and suffer from spread widening. It will not ruin us. And I've done that kind of simulation already directly, as I mentioned, without slippage, but by with spreads which are just 3 times higher than normally, and that loses here about 15,000 euro in total, but still we have a quite profitable strategy. So another amazing thing about that equity is that it flattens a little bit since 2017 and even a little bit before. We can speculate about that, but I have no real clue. Maybe it has to do with no changes for a long time with interest rates. I have no real clue, but that's what I see here. Within that Excel sheet, if you like, and that I have marked from yesterday, then you will find all the details for the individual strategies. You have that reference minute, and I translate my minutes since midnight already into a readable time, like a quarter past 6, for example. That would be the reference time for Fed decisions, with a distance of 0.5, 0.56, and risk reward ratio of 1.3 about. And there you have that list for all the parameters you need if you want to use a strategy like this. Additional information here, you can see how many interest rate decisions we have for a specific region. And you see that region in that column here. So those are the ones that you have to know. Okay, if I want to follow a strategy for euro, New Zealand dollar, and I use the EZB decisions, therefore we have a euro here, then in the past we have had 125 decisions during the last 12 years, and traded decisions has been 121. What about those missing 4? They did not leave or break out from that range, and therefore we have no trade. So we have all the parameters for the 57 setups in total. And I think, the equity for that strategy is telling its own story. So that's about news trading related to interest rate, to central bank decisions. Of course, we can extend that and my next thing to investigate would be the NFP data, because then we have once a month, one Friday. I think it's the first Friday of a month, so 12 dates per year would mean for 10 years we have 120 decisions. We can look for a strategy for that as well. And then we can even further increase that portfolio about news trading with those known news. As I mentioned, we can only trade with that kind of strategy news we know in advance, because then we can apply those rules, and we can even set up new rules for other news. But those, what I did here during that webinar, have been for central bank decisions. That this strategy is profitable, okay, you have seen, and the approach is really quite simple. We use a breakout approach for getting those results, but we need individual parameters for that, what I call the reference time, the distance for order placement, and the risk reward ratio. The good thing is that each forex pair can be traded twice, in a sense. Okay, euro US dollar, you remember, once for EZB decisions and once for Fed decisions. And therefore we have quite a lot of trades if we go through their complete list of forex pairs. Okay, That's for today. That's for this webinar about news trading. But before I really close the webinar, of course, I want to wish you a Merry Christmas. It's only a couple of days now, and then we will have Christmas already, all of a sudden, as every year. And I wish you a good start into the new year 2019. Let's see what we can do for trading within that year. It will be interesting, and hopefully you enjoyed all the kind of webinars this year. And stay tuned for those which will be next year. Have a good time and have a good evening. Bye bye.